This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 30th, 2012. Our time is 8:45 Mountain, 10:45 Eastern. Radio show runs AM 640 in Toronto, QR 77 Calgary, 630 CHED in Edmonton. Congratulations to the Toronto Argonauts, who won the 100th Grey Cup. Calgary, unfortunately, they did not play their best game. When you lose, it's tough. When you don't play your best game, it's even tougher. But Toronto played fantastic. Congratulations to the Toronto Argonauts. Our radio show runs in Toronto and Calgary. We all enjoyed watching the Grey Cup. Obviously, in Calgary, they would have preferred a different outcome. Don't forget, you can listen to our radio show on the radio stations mentioned. If you ever miss a radio show, they're archived online. Harold's websites, rarecoloreddiamonds.com and HESradio.com. We also have a podcast. It's through iTunes. In fact, iTunes was just updated yesterday, iTunes 11. I updated it on my iMac, and it's fantastic. I went to our podcast and took a look at it and listened to some of the shows as I was working. You can do the same. Get it on your smartphone, the latest and greatest of iTunes. You can listen to our radio show free of charge anywhere in the world. And Harold, it was an interesting week. We had some scenarios where there was a lot of volatility, and it's not surprising when you take a look at what's happening around the world. Geopolitical trouble, the fiscal cliff in the United States. It's a very dicey time financially.
You better believe it, Randy. Again, possibly one of the most frightening and confusing times. And again, during these particular times, you're better off to be safe than sorry. You're better off not to speculate. You're better to basically sit on the sidelines if you're uncomfortable with this fiscal cliff coming. The stock market could drop by 20 or 30%. Again, do I think that that's going to happen at the end of the year? It's possible if they don't come to some solution, but all in all, in typical fashion, they're going to kick the can down the road and delay it as much as they possibly can. All in all, the scenario for the market is not very good at this particular point. I wouldn't want to have all of my money sitting in mutual funds, stocks, and bonds at this particular point. Bonds normally are a very safe investment, but again, when inflation hits and this potential fiscal cliff, you just don't want any risky positions in the market. I'm not saying the bonds are risky at this point. Bonds will become risky primarily when the inflationary markets really start to hit, and then you want to make a change there. But all in all, it was a choppy week in the market, but no damage whatsoever. The gold market's trading right now at $1,725. What we need to see in gold is we need to see gold break above 1,800. Even though 1,900 is a high, 1,800 is major resistance, and once we break through 1,800, there are buy orders in the futures market that will propel the market higher. But again, we're only talking that on the short-term basis. There is absolutely no doubt in my mind where the gold market is going. Gold market is going into the thousands. It's probably going to at least triple from the prices that it's at right now. And the same scenario for silver. Silver's trading right now at above $34. It's trading at $34.34. What we want to see is two or three actual price increases, and this is where the major resistance is. There's some resistance at $35.50, no big deal. $37.50 is a bigger number, and I'd love to see two closes above $37.50. Then it'll move us to the $44 level. So again, at this particular point, gold and silver are just slightly below the resistance levels. I like the both markets at this point. I'm pretty sure that we've seen the lows in the market about a month ago. And again, I would be a major buyer of gold and silver physically at this particular point. The diamond market is on fire. We'll talk about that on the second half of the show. I do want to say that if you're not sitting in hard assets at this point, you could be committing financial suicide because, again, with all the problems out there, with the potential of extremely high inflation and currency devaluation, those are the markets, the hard asset market that will protect you from that. And that's what you need to be in. Physical gold, physical silver, physical diamonds. You need to make sure that your debts are paid down and that you're not speculating in the markets. Again, we should see a strong rally coming into the latter part of the year. But again, this has been a confusing year. This has been a year of an election year in the United States. There was a fairly close fought battle, and again, everybody was watching watching what was happening with the elections. The thing is that with President Obama being reelected, that tells us that we are going to continue to see the same thing as we saw for the last 4 years, which is a tremendous amount of printing of dollars. And as the Federal Reserve continues to print more and more money to try to get the U.S. economy back on track, what it does is it weakens the U.S. dollar, and that will push gold and silver prices substantially higher. So again, as we start to see more and more printing coming through, and that is going to continue to happen very heavily going into 2013, we could literally see another $1 trillion of U.S. dollars being printed to put back into the marketplace. So again, that will eventually bring on extremely high inflation, which is why we believe that we'll see gold prices triple from where they are right now, and silver prices could either triple or quadruple. We could literally see gold at 4,000 and 5,000, and we could literally see silver trading at $100, $150, and $200 before this whole thing is over. And again, at $34 silver, I think it's a tremendous buy. Oil market's been very volatile again this week. As we're taping the show, the market's up 30 cents in oil, and we're trading just under the $90 level, trading right at around $89. I'm very, very bullish on the oil market. We do believe oil prices over the next year to 2 years will be at $150 to $200. Again, I am very strongly recommending owning oil in your portfolio. But with everything happening around the world at this point, not only in the United States, where again there's a $16 trillion debt, and more than likely we'll see that debt go to about $20 trillion, and again, there's just no way in the world that debt could be paid back. That will eventually bring on massive inflation. Again, many of the reports that I'm seeing at this particular point are also saying that the amount of money that's going to be printed over the next few years is going to be astronomical, and that will also bring on high inflation. And then the pièce de résistance, which is the Federal Reserve is going to keep interest rates at zero till at least 2016, which is another 3 years from now, which means that they're going to have to reinflate the economy so heavily that, again, we do believe that that's the area that will bring gold up to the triple digits, to where we're going to be looking at 4,000 to 5,000, and again, silver in the $100, $150, and $200 range, and that could happen easily in the next 4 to 5 years. So again, silver at $34, $35 is a screaming buy. I would definitely be buying silver at this particular point because it's way undervalued. And what we did see was the high of gold at 1900 at 1725 that we're at right now. We're just not that far off the all-time high of gold, and gold could hit those numbers very, very quickly. The silver market went from 50 down to 26, is back up to $34, $35 right now. As we break above the $35 level, then above $37.50, we should be on our way back to $44, then $50 silver. And again, once we get above that level, the silver market should really take off. So I definitely take advantage of the low price of silver at this particular point. Even though gold's trading above 1700, I still think gold is a tremendous buy, and gold prices are going substantially higher. We're going to see a tremendous amount of money being printed because, again, when you're $15 or $16 trillion in debt, what's another $4 trillion? But so far, this quantitative easing has not really worked, and that's what the concern is. So by printing as much money as the Federal Reserve is printing, it's just not helping the economy at all at this point because, again, there seems to be absolutely no growth at this time. The situations in Europe, one day it looks good, the next day it doesn't, but there's no way in the world that sovereign debt situation is going away, and there's no way that Europe is not going to continue to be in the trouble that they're in. There is not enough money in the world to bail out Italy, Spain, Portugal, and Greece. And again, that's only the start of it as things get worse. So this is why we need to be extremely conservative and not take unnecessary risks at this point. This year was not a stellar year. This was not the year that we saw the moves in metals and in oil and in other commodities that we anticipated that we would see. Being that it was an election year, we knew that the markets would be choppy up until November, but again, now that the elections are over, people should really have a clear-cut signal as to where the economy is going because, again, things are not going to change that much from where they were 4 years ago, and that's why we do do believe that we need to stay in the same direction as we've been staying in, which is the hard asset market. Again, don't forget, back in the 90s, when there was no need for gold and there was no need for silver, gold was at $250 and silver was at below $4. But that's all changed now. And gold is a barometer as to what is happening in the world financially, either good or bad. And when things are good, gold's at $250. When things are bad, they're at $1,700. So gold is definitely telling you that there's an issue, and that issue is going to get stronger and stronger. So again, even though gold's at 17 and change, I love the gold market at this level, and I certainly love the silver market trading below $35. I think it's a screaming buy, and silver could easily be $150 to $200 metal. So again, I would definitely be in those markets at this point. Those are your hedge against everything coming forward. The other situations that are happening are in the Middle East at this point here, and they're really starting to get worse and worse. The situation in Syria, the situation with Israel and Palestine, again, they've got a ceasefire at this point, but those never last. And again, the situation in the Middle East is just dire at this time, and that's going to cause oil prices to skyrocket eventually. But again, they're trying to keep oil prices down as much as they can, because again, they want the economy to get back on track, but I just don't see that is going to happen. So again, Randy, at this point, it's a time to be very, very cautious. It's a time to be in hard assets like gold and silver and diamonds, and to get some oil into your portfolio, and we should be fine. Going forward the next 5 years, we should see very strong inflation coming forward, but if you own the assets that we've recommended, you should continue to do extremely well.
Connect with Worldwide Precious Metals. That's the company Harold recommends you use when it comes to investing in precious metals: gold, silver, platinum, palladium. 1-866-623-2002 is their telephone number. Their website is wwpmc.com. We have a free weekly newsletter we send out via email free of charge every week. We know you're busy, but we also know you work very hard for the money that you have, and you want to protect that money and ultimately make it grow. That's why we do this radio show. That's why we have this free newsletter. We have put it together in a way you can go through it in 5 minutes very quickly, or you could spend hours if you want to. It's absolutely free, does not cost you anything. Just get your name on the list. Free weekly newsletter from us. Yes, the World Financial Report on Radio, the companion to our radio show, our newsletter. Connect with the folks at Worldwide, 1-866-623-2002. 1-866-623-2002. Their website, wwpmc.com. And let them educate you about why you need to have hard assets in your portfolio at all times. It's a must. And it was interesting, in the newsletter, I found some quotes and quick hits that I want to pass on to you. It's interesting. Mark Stein, who is a commentator, said, if you took every penny, every single penny that Warren Buffett has, it would pay for 4.5 days of the U.S. government. This tax the rich won't work. The problem here is the government is way bigger than even the capacity of the rich is to sustain it. The Buffett rule would raise about $3.2 billion a year, and it takes 514 years just to pay off Obama's 2011 budget deficit. That's the problem with the fiscal cliff. This is why you're seeing the Republicans and the Democrats in the United States arguing. In fact, Timothy Geithner, Treasury Secretary, met with a top Republican. He heard what Geithner had to say and burst out laughing. This fiscal cliff is very serious, and it's going to be bloody, a bloody political battle in the United States. Ron Rosen said this week, and you can see it in the newsletter, there is no painless way out of the mess that we are in the world today. We are in the final death throes of a mess that started 100 years ago with the creation of the Federal Reserve, and there is no painless way out. The solution to solve the problem is very, very painful and is politically impossible to accomplish. Therefore, the markets will do the work that nobody else will do, and the markets will work up for gold and silver and down for the common stocks and industrial shares. The market will do the work that politicians won't. One of the quotes I did see this week and there was no attribution to it. But they said the politicians in Washington, D.C., they know what to do. They know what the right thing to do is, but after they do that right thing, how do they get reelected? That's the problem that they find themselves in, and this is why you're seeing in the United States all this backbiting. One of the top stories, Harold, that we have in our newsletter this week, Dan Norsini was interviewed by King World News, Eric King, a fantastic website, King World News, and he said, and this is hugely important to the gold and silver market, the Fed is going to commit a staggering $1 trillion of QE for 2013. One of the things that may have been overlooked by a lot of people, but it certainly wasn't overlooked by some of us in the trade, was a report that was published by Goldman Sachs dealing with the Federal Reserve and its upcoming policy meeting. Goldman Sachs expects next month the Fed to come out of the policy meeting announcing QE4. It will purchase $45 billion each month in treasuries. This number will be in addition to the already existing QE3, which is $40 billion per month in mortgage-backed security debt. But in a sense, QE4 is going to be the replacement for Operation Twist. Operation Twist was designed to push down the long end of the curve in order to keep interest rates artificially low. But here we go again. Now we're talking about an additional $85 billion each month. This is fresh purchases of treasuries. Here's what is interesting. Goldman Sachs expects that to continue all the way through 2013. So do the math. That's more than $1 trillion worth of QE for 2013. In 2014, Goldman believes the economy to pick up. They believe they will also be actually dropping the unemployment down a little bit at some point in 2014, which will allow the Fed to drop those $85 billion in purchases back down to $50 billion each month. So you're talking close to $600+ billion for 2014. Goldman expects this to continue all the way to 2015. So we're looking at close to $2 trillion of QE over the next couple of years. Keep in mind, this is already in addition to the $2.5 trillion of QE 1 and 2. We're talking about close to $4.5 trillion, which has already been and will continue to be manufactured out of thin air in order to keep interest rates artificially low. Goldman also predicts there will be no change in the Fed's interest rate policy until 2016. So we're talking 3 full years, 13, 14, and 15, where you will have near zero interest rate policies from the Fed. Now, as you know, anytime you have net negative real interest rate environments like we have now, it is very friendly for gold. So you take the near zero interest rate environment with negative real interest rates plus close to $2 trillion of upcoming additional QE. And here's what I have to say to that. Anyone who does not own physical gold is committing financial suicide. Harold, I thought it was very important to read that over because I agree with Dan Orsini 100%. They've come a long way in the United States. They are not, with Obama in office now, and he supports Ben Bernanke with quantitative easing, they are not going to stop now.
No, they're not, Randy. And again, it's going to go, they're just going to open up the presses. And again, all we have to do is sit back and wait and see what the results are going to be. But again, every market is an action-reaction type of market. When one thing's happened, something else is going to happen to the market. So basically, we know that when you are printing that amount of money, it has to reduce the value of the dollar. That's exactly what it does. It's like any other commodity. If they overproduce oil, the prices are going to fall if the demand is not there to pick it up. And let's face it, the demand for the U.S. dollar is not very strong around the world at this point. So the more and more and more dollars that are out there, it just continues to weaken. And all you have to do is look at any chart on the dollar and gold, and as the dollar continues to fall, gold continues to go up. That's what I mean by action-reaction. When the dollar goes down, gold increases. And at this particular point, what has hurt us this year was that the U.S. dollar went from 72.5 cents that we saw last year up to 84 cents. It's now back down to 80. And the only reason that the U.S. dollar gained any strength this year was due to the sovereign debt situation in Europe. Aside from that, we'd be talking about a 60-cent dollar at this particular point, and gold probably at $3,000 to $4,000. So again, those numbers are going to hit. There's absolutely no doubt in my mind that we are going to hit triple in gold and 300 to 400% higher in silver before this whole thing is over. And most of it is going to do with the weak dollar, which is going to bring on high inflation. And again, that's the action reaction that I'm talking about. Higher gold, lower currencies, and that's always been the scenario for high inflation.
Connect with Worldwide Precious Metals. Their telephone number, 1-866-623-2002. That's a company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. They have a proven track record of over 10 years in helping you make money. Obviously, the key is really maximizing profit, minimizing the risk, and that's what they help you do. They will educate you as to what is right for you based on your risk tolerance. Speak with them, 1-866-623-2002, their website, wwpmc.com. We're very bullish on silver. And in fact, some of the reports coming out this week, GFMS, which is owned by Thomson Reuters now, they said that silver could go to $50 an ounce in 2013. TD Securities coming out and saying we may see a rally above $44 by the end of this year. Clive Mond, he is well known as a technical analyst. He has some analysis. We have it in our newsletter. Recent action in silver has been very, very bullish, and he thinks that we could see a huge run in silver. But one of the stories that really caught my attention was from Stephen Lieb, and he believes that gold, silver, and natural gas are going to soar. As the world really begins to seriously look at energy problems we face going forward, governments will start to realize the strategic importance of silver. Silver is a better buy than gold. Silver is going to play a virtual role in producing energy around the globe. Japan is turning to solar. Saudi Arabia is turning to solar. Virtually every major country in the world is turning to solar. And he believes that we could see silver become a 3-digit commodity. And a lot of it is based on solar. And he thinks that the bottom line is we are looking at what's beginning to be likely a massive boom in monetary metals, but in particular silver. And silver is really going to soar. A lot of it has to do with solar. Get our newsletter. That article is in there in the silver section, 1-866-623-2002, the website, wwpmc.com. That's the beautiful thing, as we've said before, Harold, about silver. Monetary metal, but also industrial aspects to it as well. We have about a minute left here.
You bet. And what that will do is create a shortage in the silver market. So that's another thing. Right now, you've got silver being used in so many different areas. Along with that, it's a hedge against inflation and a great investment metal in which so many people have bought physical bars of silver and coins. And the fact is that we've never had a large supply of silver. So add to all of this a supply and demand scenario that could cause prices of silver just to absolutely skyrocket. Just look at the charts on silver going to 79 and 80. You'll see it went from $20 to $50 in a very short period of time. That's the way silver trades. It's one of those fast-moving markets. But again, we don't want to trade this market. We just want to buy and hold on to our physical silver, and sit back and wait for our time. Again, 2013 should be a very strong year for us.
1-866-623-2002, the website, wwpmc.com. Speak with Worldwide Precious Metals about starting your own precious metals investment account today. We're going to come back and talk about diamonds, in particular our featured diamond, a diamond I have never seen in my life before. It is stunning. If Superman had a diamond, this would be it. The World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 30th, 2012. Our time is 9:10 Mountain, 11:10 Eastern. Radio show runs AM 640 in Toronto. Congratulations to the Toronto Argonauts on their win in the Grey Cup. 6:30 CHED in Edmonton. We can only hope our Eskimos make the Grey Cup at some point, the way things are going. The Calgary Stampeders, who had a fantastic season, unfortunately just picked a bad day to have a bad day. Although Toronto did a great job, Calgary, they just had a bad day in the Grey Cup. Our radio show runs on QR77. If you ever miss a radio show, catch us online, HESradio.com, rarecoloreddiamonds.com. We also have our podcast through iTunes, as I mentioned off the top of the show. There's an update of iTunes, and it is fantastic. You can go to podcasts or even just type in World Financial Report. It comes up, and you can have it on your smartphone. The radio show is portable. We go anywhere you do. To invest in precious metals, the company Harold recommends you use. They've been in business over 10 years, a Canadian company, Worldwide Precious Metals, 1-866-623-2002. Lots of Johnny-come-latelys out there. We've been doing the show since 2002. Harold started right after 9/11 in 2001. Doing the show a long, long time. And back then, Harold and I now, we were the only ones doing the show, doing this type of show. There are a lot of copycats out there, but this is the original, and no one touches Harold or Worldwide. 1-866-623-2002, their website, wwpmc.com. Talk to them about getting our free weekly newsletter and let them earn your business, and they will show you how you can start your own precious metals investment account. Harold's website is rarecoloreddiamonds.com. And this week, before we get to our featured diamond, because it is so stunning, Speak with Harold. We have auction results from Christie's Hong Kong Magnificent Jewel Sale. Some great diamonds sold there. Also, Ravenel Autumn Auction, which took place in Hong Kong. And we should mention we have a great article, Why Diamonds Are Investors' Best Friend. And there is going to be another big auction coming up in New York City, December the 10th. They're going to be selling a red diamond, and they have a rare red. Also some D, and Harold has talked about, and he has these as well, those D-colored diamonds. We'll keep you updated on that sale as it comes in the weeks ahead. Our featured diamond this week is something I have never seen before. It is absolutely stunning. If Superman had a diamond, this would be the diamond that he had. This week's diamond, a 0.62 carat shield cut, fancy, vivid, yellow, internally flawless. You can see the video on Harold's website, rarecoloreddiamonds.com, under the featured diamond of the week. It's in our newsletter, a picture, also a link to Harold's website. And Harold, what a great Christmas gift this would be for someone. And obviously, Christmas is coming up. If you're interested in having a diamond, getting a diamond as a gift, speak with Harold. But this featured diamond this week, absolutely stunning.
Thank you very much, Randy. It is very unique. A shield is a very, very rare cut. And you're 100% right. It looks like Superman's emblem. It's a shield cut. Not only is it extremely rare, but the color is a vivid, which is the best that you can possibly get, and it's internally flawless. So it's an extremely rare diamond. It's so beautiful. The color of it is just so vivid. It's just a magnificent diamond. You can tell by looking at the video of it how rare this diamond is. And again, because of the rare cut, it's just a diamond that will continue to go up in price. So it's a phenomenal investment. The diamond is on the website as a featured diamond and will definitely sell this week. It's so rare and so beautiful. Again, very seldom will you ever see a diamond cut like this. And again, the color is a 10 out of 10. It's just an absolutely spectacular diamond. And again, it is available for sale. I've never been more pleased with what's happening in the diamond business. In fact, almost every day now there's another company popping up that's trying to sell diamonds, and basically they know very, very little about the diamond business. My partner is fourth-generation miners and cutters. So again, this is why we have the type of diamonds that we do on our website. We have over $750 million worth of diamonds available. And again, our diamonds start at $15,000, and we actually have a diamond that sells for over $50 million. So again, most of our clients do not spend that type of money. Most of our clients invest under $100,000. Again, you can get involved in the yellow flawless market, which I recommend very highly because, again, they have a track record. They have to be internally flawless diamonds. If they're flawed, they don't go up anywhere near as much as an internally flawless. We carry the fancy light yellows, which are known as canary diamonds. These are in the $15,000 range. They go up by 25% a year. They double every 4 years, except during times of high inflation, where they've gone up 500% in 2 years in 1979 and 80. So again, you've got these beautiful, fancy, light yellow, internally flawless diamonds, and those are known as canary diamonds. They're very soft and beautiful, but they're very valuable, and they go up by 25% a year. 25% a year, You used to be able to make that in stocks and real estate type of thing, but there's no investments out there that make that type of money anymore, and there's no risk in buying a diamond from us because, again, these are hard assets. They do as well as gold without the volatility. And again, with what's happening in Europe and what's happening all over the world with currency depreciations and inflation coming, these are your best assets. Gold, silver, diamonds have a proven track record and do extremely well during these extremely difficult times. We also carry fancy yellow internally flawless diamonds. They're in about the $20,000 to $25,000 range. They also go up by 25% a year, double every 4 years, and also during times of high inflation, those were the diamonds again that went up 500%. If you look at 1980, you could have bought a 1 carat radian cut fancy yellow internally flawless diamond for about $500. Now they're about $20,000 to $25,000. Then you've got the fancy intense yellow flawlesses and the fancy vivid yellow flawlesses, which is the best that you can possibly get. All of those diamonds are amazing investments, and again, they're no risk investments because they've never ever gone down in price, and because there's never been a new mine discovered in the last 15 years that produces any of these type of diamonds. Again, you've got a tremendous demand for these and an extremely small supply. And again, economics 101 tell you when the demand for a commodity is extremely high and the supplies are low, the prices always go up in value, and that's what's happening at this point. Now, there are other firms out there that are selling yellow diamonds, and they are graded as internally flawless, but understand, if they're inexpensive diamonds, if they're in the about the half the price of the diamonds that come from South Africa and South America, then there are diamonds that come from India, and they're more brittle, and they don't have the fire and the shine of a South African and the South American yellow, and consequently they're much cheaper than the high-quality diamonds that come out of South Africa. So be very, very careful of that. Again, just because a diamond says it's internally flawless and it's yellow does not mean it's an investment-quality diamond. In fact, most of the diamonds that come out of the mine are not investment-quality diamonds. Yellow flawless diamonds, fancy intense, fancy vivid, and now we also have the canary diamonds, which start at about $15,000, and they are absolutely spectacular. The other diamonds that you want to look into, which I think are amongst the best investments that you can possibly get, are the Argyle pink diamonds. We've been sellers of Argyle pink diamonds for many, many years now, but we now know that the mine that produces these diamonds is going to close before 2018, which is only 5 years from now. From our experience, when this type of scenario happens, when the supply of a particular diamond or any commodity is totally cut off, the prices reach extremely high levels, and that's what we believe is happening with Argyles. All you have to do is see where the prices of Argyles were 10 years ago, where they are now, and where they're going to be 5 to 10 years from now, and this is an investment that you definitely want to make. It's not for everybody because, again, to get into the Argyle pink diamond market, where last year you could have gotten involved for around $20,000, now you get involved for about $30,000 to $35,000 and up. These diamonds are in the news almost every single day. They took the Argyle tender diamonds to England this year for the Diamond Jubilee, and they showed some of these diamonds, and everybody went crazy for them. In fact, the Argyle Siren, which is the top Argyle diamond this year, sold for $2 million. Last year, it was a diamond that was over 2 carats that sold for $2 million. So you can see that the diamonds are getting smaller and smaller, and the prices are getting higher and higher. We believe that the price of Argyles over the next 8 to 10 years will increase 10 times what today's prices are. It means that if you bought a $40,000 Argyle pink, you can get back $400,000 in the next 8 to 10 years, and that's what we believe is going to happen with Argyle pinks. They're in very, very small supply. In fact, the whole year's production of Argyle pink diamonds would barely fill a champagne flute, which is a champagne glass. You're talking about a minuscule market, and the Argyle mine produces 95% of the world's pink diamonds. So what do you think is going to happen in 2018 when the mine closes down? Give it 2 years for the diamonds to run out, and again, diamonds you can buy for $50,000 today can be a $500,000 diamond in 10 years from now. Seeing that we cannot trust putting our money in paper assets at this point, you've got the fiscal cliff coming up, you've got quantitative easing. You've got all these scenarios happening that could drop the market like it did in 2008 and in 1999. Why even put your money to risk anymore when there are other assets that are much safer and will definitely get the job done for you? In fact, in 2008, if you had $1 million stock portfolio and it dropped by 50%, which is what the stock market did, your $1 million portfolio dropped to $500,000 or less in most cases. However, there are certain diamonds that went up 50% at that point, meaning that if you had $1 million diamond portfolio in D-flawless whites as an example, your portfolio increased by $500,000. So you can see what I mean by hedging against those type of scenarios. If you only own stocks and the markets fall, you're susceptible to losing a major part of your net worth. But if you hedge that with certain diamonds, you can actually hedge against terrible things happening in the paper asset market. And if you take our advice and get out of the paper asset market and put your money into the hard asset market like gold, silver, and diamonds, you could actually beat this situation to a very strong extent. So I very strongly recommend that you put some of your money into yellow flawless diamonds, Argyle pink diamonds, and D-flawless whites. Now, the name of my company is Rare Colored Diamonds. Why would I be offering clear diamonds? Because they're amongst the best investment diamonds that you can get. They represent 0.001% of the market, and these are the diamonds that went up in 2008 that when the markets went crazy. So basically, these diamonds go up by anywhere from 25 to 50% a year, and they represent a tiny little part of the market. The other thing that's very exciting about the D-flawless white market is the fact that there's a fund that has finally been approved, a diamond fund. It's not in North America, but it's in Europe. And it's a good friend of mine that's actually making this happen, and it's the only diamond fund that has ever been approved by certain governments and by certain banks. And the banks are insisting on D-flawless whites between 1 and 5 carats, the round brilliance. Now, I can tell you 100% for a fact that there is no way in the world that there's enough diamonds in the world that are D-flawless whites to make this fund extremely popular and successful. And that's primarily because you're talking about a market where the diamonds are so rare and there's so very few of them. So I know that this fund is going to buy as many of these D-flawless whites between 1 and 5 carats, and the prices are going to go ballistic. So while you can still get them, and I do have them, if you go on my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and go to the loose diamond section, first of all, stop at the yellow flawlesses. You're going to see our selection of fancy lights, fancy yellows, fancy intense, and fancy vivids. All you have to do is click on the view, and then you're going to see our diamonds. They're all videoed, so you can see every aspect of the diamond, and they're absolutely perfect diamonds. They're spectacular. After you've looked at our fancy yellows, then go to our pink diamonds. We have more Argyle pink diamonds than any company in the world, and within the next 30 to 60 days, you will see our brand new Argyle pinks coming online. And again, all of these diamonds are increasing in value, but we have more Argyle pink diamonds than anybody, and the reason for that is I believe in them so much that I put almost all of my money into these markets. And I can sleep at night knowing that we own Argyle pinks and that my clients own Argyle pinks and yellow flawless diamonds. And after you've looked at these magnificent pink diamonds and realize that soon there will be no more of these diamonds available, you'll understand how valuable these diamonds are and what a phenomenal investment and how much money you can make. My recommendation is to sell some of your stocks and put it into the diamond market. You're going to do way better in diamonds than you will in the stock market, especially over the next 5 to 6 years. After you've marveled at these magnificent pinks, then go to our D-flawless whites, which are right under the pink diamond, and feast your eyes on some of the most magnificent diamonds you have ever seen. Now, the difference between colored diamonds and colorless diamonds is that the way the GIA grades colored diamonds is that they're called fancies. Fancy light yellows, fancy vivid yellows, fancy intense yellows, fancy pinks, fancy vivid pinks. But in clear diamonds, they start with the letter D, and D means totally colorless. And then our diamonds are either internally flawless or flawless, and those are the diamonds that you want to own. First of all, go to the 123. round, brilliant, D flawless. And marvel at this diamond. It's one of the most spectacular diamonds that you have ever seen. And after you've looked at this diamond, how magnificent it is as it turns 360 degrees on our video, then click on the GIA report and you'll understand what I'm talking about. As soon as you see the GIA report, you're going to see that this diamond was graded on February the 8th, 2012, so it's a brand new diamond. It was such an important diamond that we had it laser inscribed and registered with GIA, and you'll see that right visible on the GIA report. The shape and the cutting style is round, brilliant, one of the rarest cuts. You've got the measurements in millimeters, then you've got the carat weight, which is 1.23 carats. The color grade is a D, which is the best color you can get in a white diamond. It's colorless. The clarity grade is flawless, which again is the best that you can get. And then when I say triple X, I'm not talking about anything pornographic. I'm talking about excellent, excellent, excellent in every area. It's an excellent cut, it's an excellent polish, and an excellent symmetry. These are the rarest white diamonds in the world, and they go up tremendously in value. I cut, or my partner cuts, the majority of these diamonds, and they are spectacular. And again, we have met with the owners of this fund out of Europe, and these are the diamonds that they're buying for the fund. Again, we take care of our Canadian clients first. So again, these are the diamonds that can hedge you against stock market depreciations and all those type of scenarios, and these are the diamonds that represent 0.001% of the market. Now, we carry red diamonds, the rarest diamonds in the world. They start at about $2.5 million a carat. We carry blue diamonds, again, extremely rare. There's one diamond on our website that's over $7 million. It's a 3.5 carat blue. But most of our clients invest in yellow flawlesses, argyle pinks, and D flawless whites. And all those diamonds that I've just described to you are under $100,000. You can get involved for $15,000 and get into the Canary diamond market, and you can put those diamonds away for the next 10 or 20 years, and that will take care of your retirement for you. I very strongly recommend, with all the uncertainty in the world today, with the currency devaluations, the potential of extremely high inflation, wars in the Middle East, and everything, you need to have some money tucked away in a rare asset like a diamond. And these diamonds are portable private wealth. They can fit in your pocket and nobody will even know you're carrying them. And again, you can carry $1 million diamond with you and nobody would even know it. But try to carry or go across a border with $1 million in cash and see what happens. So again, with the state of the world economy, this is one of the most important assets you could ever own, and I'm very proud to bring to you yellow flawless diamonds, argyle pink diamonds, and now D flawless whites, and that's the area where most of the money is going to be made, in my opinion. I'm a heavy owner of gold and silver physically, and most of my money personally is in the diamond market because it's my business, and I've been in business for 35 years. There's a lot of other companies that are popping up at this particular point. One thing about the diamond market, which has always been present, is, again, they're a very valuable asset, but how in the world do you sell them? And you know yourself, for anybody that's owned a diamond in the past that you bought from a retailer, when you take that diamond back to the retailer, they're not going to give you as much as you paid for it. So how in the world could it be a good investment if you bought it and 5 years later or 2 years later or whatever it is, you go to resell it and you're going to get less than what you paid for it? That's because there's never been a secondary market to resell these diamonds until we built that. So we own 8 Siegel Fine Auctions, the only secondary market in the world that resells diamonds. And I'm very, very proud of it. We will have our next auction. I'll announce it. It's coming up in January. We've delayed it because of the holidays and things like that. And quite frankly, there's a major shortage of diamonds to be auctioned off. None of my clients are selling their diamonds at this time. So basically what I've had to do is go into my personal supply of diamonds and bring them forward, which I will, in order to continue to hold these amazing auctions. At our auction that will come up in January, we'll be offering some amazing and very valuable gold and silver and platinum coin sets. We may have an emerald and a ruby, but we will have some of the most beautiful argyle pink diamonds that you have ever laid your eyes on, along with some phenomenal green diamonds. So again, we have built the only secondary market to resell your diamonds for you. So think about this very closely before you do business with any other firm. Number one, how long have they been in business? Number two, compare their diamonds to ours and make certain that you're getting what you're paying for. Again, you know, a lot of these companies have only come into fruition in the last year to 3 years, and then how in the world are you ever going to sell your diamonds? We built 8 Siegel Fine Auctions for our clients to resell their diamonds, and this is how we also make our money, because we make 10% of the profit. If you buy an Argyle pink diamond for $50,000 and sold it 10 years from now for $500,000, we get 10% of the $450,000 that you made, and you make all the rest. That's the way it should be. If we do a great job for our clients, we should participate in the profit, and consequently, if we don't do a great job for our clients, we don't deserve to make anything. So if you don't make anything on your diamond, we don't make anything. I can assure you that if you hold onto these diamonds for the proper period of time, that you will see the type of returns that we talk about on this show. So again, go to our website, rarecoloreddiamonds.com, go to the loose diamond section, look at the yellow flawlesses, look at the Argyle pinks, and these magnificent D flawlesses, and you're going to see why Rare Colored Diamonds is the top business of its type, and why diamonds are about the best investment that you could possibly make. They never go down in value. They double every 4 years, but now that the Argyle pinks are going to be off the market by 2018, you're talking about an investment that can return 10 times your money, and that really doesn't exist in any other market, especially with an investment that has no risk to it.
Back in August of 2005, Harold was the first one to write a report as to why you should be investing in rare colored diamonds. He is the leader in this market. RareColoredDiamonds.com. Go to our featured diamond. It is a must-have diamond, something I have never seen before. A 0.62 carat shield-cut, fancy, vivid, yellow, internally flawless. RareColoredDiamonds.com. Go to the featured diamond and see that shield diamond. You will be stunned. Now, if you're a guy out there who wants to give that special person in your life a diamond ring, and when we had our seminar, I saw some amazing rings that Harold has put together. You would pick the diamond from Harold, obviously work with him on the ring. That's something he can do with you. Connect with him, rarecoloreddiamonds.com or 1-800-432-1022, 1-800-432-1022. Some of the rings that I saw at our seminar, simply stunning. And if you're wondering how yellow diamonds are doing at auction, we have the auction results from Christie's Hong Kong Magnificent Jewel Sale this week. Lot 1836, a superb colored diamond and diamond ring, set with a rectangular-shaped, fancy, vivid yellow diamond weighing approximately 10 carats. The estimate on it, $77,000, 777, and it went for $967,000. As well, Lot 723, a colored diamond and diamond ring, set with an oval-shaped, fancy, intense yellow diamond weighing approximately 7.36 carats. The estimate on it was $103,000. It went for $173,000. And there was an interesting auction in Hong Kong from Ravenel, and they had a colored diamond and diamond ring, a pear-shaped fancy intense blue and fancy intense pink diamond, 2 and 2.3 carats respectively, in a ring. The estimate on it was $2.2 million. It ended up going for around $2.4 million. Harold, we have about a minute left here. You can see with the auction results and with your auctions of the past, people are doing very well in this diamond market.
It's the most exciting thing that we've ever done, Randy. And again, our clients love it because, again, they've got a hard asset that they hold in their hand. We deliver them directly to you. You know, it's not that the experts at Christie's and Sotheby's don't know what they're doing. They certainly do. When they say a diamond's going to sell for $1 million and it sells for $2 or $3 million, it's just the market at this particular point. There's so few diamonds and so many people that want to invest. So, again, go to our website, rarecoloreddiamonds.com. We want to work with you, and we want to be the people that you go to buy and sell your diamonds. So go to our website this weekend, look at the yellow, pink, and D flawless diamonds. I'm sure you're going to see museum-quality pieces that will literally take your breath away.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
The company Harold recommends you use when it comes to investing in precious metals, worldwide precious metals, Obviously, they're there to help you maximize profit, minimize the risk. Let them earn your business. They've been in business the entire time of this bull run in hard assets. Connect with them, 1-866-623-2002. The website, wwpmc.com. Harold's websites, rarecoloreddiamonds.com, hsfineauctions.com. And speak with Harold about our featured diamond this week, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.